What's going on, you guys? My name is Daniel, and here on this channel we talk about Canadian growth stock investing. And in today's video we're going to be doing something a little bit different, where I'm going to talk about 5 different stocks under $5 in 5 minutes. So let's start the timer and see if I can do it in under 5 minutes. So the first stock we have is ESE Entertainment, and the ticker symbol is ESE.V. It trades on the TSX Venture. This company's in the esports sector, and recently they started to pick up a lot more momentum, and it looks like traders are piling in. So this stock, although it doesn't really have the best fundamentals as a business yet, I think that they have strong tailwinds with esports becoming a lot more popular. Esports already has an audience that's larger than most major sports out there, including the NBA, NFL, and NHL. And with the rise of internet speeds, as well as people watching Twitch online and all these gaming channels coming up on YouTube, I think that there's good tailwinds for esports going forwards, and this is going to be a big thing in the future, and ESE Entertainment is going to capture on it. If we look at the charts, we can see that today they traded at $1.37 per share, and there's been quite a bit of volume since October 27th. And we see a nice upwards trend here with a huge pop last Friday. I think that going forward into this next week, we may see a bit more upside to the stock. However, I think that there's a lot of traders and algorithms going into the stock right now, so beware if you're investing in this. Also, these are all very high risk stocks, so do your own research and only invest what you're willing to lose. The next stock on this list is MindMed, and I know a lot of you guys have asked me to look at this company, and I did look at it. However, for me personally, I don't think that this company lines up with my style of investing because they are in the psychedelic space, and for those of you guys who know what psychedelics are, they're sort of like an assistive drug therapy company. And the drugs that they use are a bit more hardcore, harder than cannabis, so for me this is sort of a no-go zone. But for those of you guys who are investing in this company and you guys are just looking for capital gains, then by all means, I think the stock could be another big winner out there. Apparently the psychedelics industry is worth about $100 billion, and currently today MindMed sits at a market cap of around $1.5 billion. However, this company is very high risk, so do your own research when you're investing in this company because they currently don't have any revenues, and all they have is certain trials that they've done for the FDA to prove efficacy, but they still haven't got through that yet. At a $1.5 billion market cap, this is very expensive for the company that doesn't have any sort of revenue to show, and I don't really know if they have a path to profitability. So careful if you're investing in this one. This might be a short-term trade. So that's my opinion on MindMed. If we turn over to the charts, we can see that there's been some very good volume in the past couple of weeks, with Friday having a huge pop. So I think this is a huge score for MindMed investors. However, just be aware, there's a lot of day traders and swing traders who are trying to bid up the stock and are in it for a short term. I'm in a couple of stock market groups, and all of them are talking about MindMed, and people are getting in because of FOMO. So just be careful if you're trading this one. The next stock on this list is Eat Beyond Global, and recently I did a video on this, so check that out if you want a bit more research into that company and what I think about it. I personally do have a stake in it, and I did buy at the peaks. However, the reason why I bought in is because I think that they're able to invest in plant-based companies pre-IPO, so they're going to have a lot more stock price appreciation if they pick winners. So I'm okay with paying a premium, and the money that I invest in it, I'm willing to lose. For those of you guys who are looking to buy in right now, there has been a nice healthy pullback. So if you're looking to get in right now and thinking that it'll pop this week for a swing trade or a day trade, it may not be a bad idea. But again, do your own research and only spend or invest what you're willing to lose. This company has also invested in companies like the Very Good Food Company as well as GDNP, which have both popped quite a bit from since they bought it. They bought Very at around a price point of 25 cents per share. Today it trades at around $9 per share. And they bought GDNP at a price point of 14 cents per share. And I checked the share price of that one, and it's about $1.28. So this company has done quite well with their investments. However, the amounts that they invest in these companies are still quite small, in the $100,000 range to $200,000 range. If we look at their market cap today, they have a market cap around $40 to $50 million, and they only have about $3 million of cash that got invested into this company for investments. So we're paying a very high premium for this company, but in the long run, the hopes of investors who are buying into this company is that they can take this small amount of money, like $3 million, and possibly turn it into $300 million. And that's up to management and how they invest the money. If we go over the charts, we can see that Eat Beyond Global has not been trading for very long. They IPO'd on the CSE on November 17th. And only a couple days ago, they started to garner a lot more attention, as we can see a huge volume spike here, and a lot of stock traders bid this up. The reason why there was a huge pop in price is because the company that Eat Beyond Global invested in, called Eat Just, had an article that they're starting to sell their products in Singapore after they got the okay from the government. And after that, there's been a lot of attention in penny stock groups for this company, so that's what bid the price up. But we have seen some selling happening because these earlier traders who got in around here are probably taking profits. But I do know that people are looking to get back into this company from the stock groups that I'm in, so that's kind of the information that I know of right now on Eats Beyond Global. I'm not really looking for a short-term trade on this unless somehow it skyrockets to $10 per share. Then I might take back my principal and cash out that amount and hold the rest as playing with house money. So I know I said this video is going to be 5 minutes possibly, but it seems like it's going a little longer, so bear with me. We've got 2 more companies to cover. The next company we're going to cover is PlantX. And I haven't talked about this company before. However, I did get some comments on my Eat Beyond Global video where people were asking me to cover the stock. And the ticker symbol is VEGA, and they trade on the CSE. So why this company is interesting to me is because recently they announced this huge deal that they have with a company in the States called Live Marketplace. In Live Marketplace, if you were to search on Google, there's not much information on them. However, they're a subsidiary of another company which sells wine and stuff like that. And they do it through an e-commerce style. So Live Marketplace was a spinoff of that company that does around $80 million in sales per year. So I think that Live Marketplace has a team in place that's able to bring vegan food to the San Diego area where they're operating. So the deal that PlantX has with Live Marketplace is that Live Marketplace has promised to buy about $25 million worth of goods from PlantX. And this basically puts PlantX at a revenue next year of $25 million USD, which is around 30 to $33 million Canadian. If we look at the plant-based community in Canada today, we know that a lot of the plant-based companies are doing revenues under $1 million per year, with the exception of the Very Good Food Company, which actually had revenues of around $750,000 for just the month of November. So if they're able to keep that up, then roughly they'll make around maybe $8 to $10 million in a year, but nowhere close to what PlantX can do with this deal of around 30 million Canadian dollars in a year. So this is a huge thing for PlantX. However, there's still a lot of risks behind this company, so again, do your own research. I'd say the founder has a bit of a sketchy past with Namaste Technologies, and he was actually fired and sued by that company. So that's one risk behind this company, PlantX, who's founded by the same founder of Namaste Technologies. There are other risks out there, but I don't have time to cover them, so do your own due diligence if you're looking to invest in PlantX. Now, if we jump over to the charts for PlantX, we can see that there's a bit of a cup shape forming here. And this spike up here was actually the news that they signed a deal with Live Marketplace. And then there's a huge sell-off, maybe, I think, when the whole Very fiasco happened, and people maybe got a bit bearish on plant-based meats. However, since then, there's been a nice recovery. And I think that there's going to be a lot more people probably talking about PlantX as this recovery continues to go on, maybe up to the $2 range. And it's going to catch a lot of attention from penny stock traders. And then these stock trading groups like on Telegram, WhatsApp, or on Facebook chats, they're going to pick up on the stock and probably push it a little higher. So if you're looking to make some short-term trades, look out for PlantX. I don't say buy it right now, but do your own research before buying it. I think it's an interesting opportunity because there is a lot of volume. So it shows that there's a lot of people getting into the stock versus what we had before in this initial run-up. So I think there's a lot of investors that are on the stock that have eyeballs on the stock compared to what it was before. And we may see prices go a little higher, and we might have a cup and handle formation that's going to go like this. It's going to pull back here and then shoot up higher. So these are some things that I'm looking for when I look at the charts for PlantX. The last company that we have here is SHG, or Skylight Health, and they used to be CB2. And I think that this company has pivoted from a cannabis-based business over to more of a telemedicine in the healthcare space. And this company is sort of along the lines of CloudMD and Well Health Technologies, which is what interests me in the first place. So I think this company has some possible good long-term growth with the tailwinds of telemedicine picking up. And the fact that it's a small cap company right now, or a micro cap company, I think that there are more investors looking to pile in right now when the stock price is low or the market cap is low, and riding the wave up to maybe the size of a CloudMD, and if we're lucky, to a Well Health Technologies. So this penny stock right here, I would suggest do your own research. Don't buy in because I'm talking about it, but I think this is a company to look out for. Also, I think that the recent news that they've had a bought deal offering is really helping push the stock price up, because now the company has a lot more cash that they can use to purchase clinics or purchase other technology companies and ultimately build up their business. So let's jump over the charts to see what they can tell us. So looking at the charts, we can see that it trades at $1.11, and there's not much history on Yahoo Finance. However, jumping over to Google, we can see that they have a history as a CB2 Insights. And we can see it was trading at around like the 10-cent level a year ago. And then recently it just took off from November 25th at 45 cents per share, all the way up to about $1.11 today. And I think that's because they actually switched the name from CB2 to Skylight Health Group. And people just know that Well Health and CloudMD have done very well. So they're buying in because of the whole telemedicine craze. And CloudMD and Well Health Technologies have taken a bit of a breather just because of how much they've run up this year. So people are switching their money maybe over from those two stocks into Skylight Health Group, as it hasn't run up that much and its market cap is only $178 million compared to CloudMD, which is at around $344 million. And Well Health is at a market cap of $1.1 billion. So right now I think investors and traders are looking for quick money, looking for penny stocks to buy in that are very small market cap, that have the chance of maybe doubling, tripling, or quadrupling their money, which is why penny stocks are taking off. For those of you who are beginner investors, I would suggest not dabbling in penny stocks because they are very dangerous. And if you do want to dabble in them, only put maybe 1 to 5% of your portfolio, which is kind of what I've done personally. I think that penny stocks are very dangerous. However, if you do your research and find businesses that have good tailwinds and a good management team, as well as proven revenues, then it's not as much of a risk versus a company that has nothing, like no revenues, like MindMed, for example. Anyways, that's all I have for you guys today. This ended up being about 10 to 12 minutes, I think, after all the editing. Sorry for it going a little bit longer. However, you got 5 stocks under $5 to add to your watch list and look into. If you guys want to learn more about Eat Global Industries, there's a video right up here. Otherwise, you can check out this other video about the Very Good Butchers. If you're there, I'll see you there. If you're not, keep up the grind and have a great day.